Tesla is making big moves, and the markets are feeling the heat as Elon Musk lays out a massive new spending plan. Profits are up 17%, but growth concerns linger as the electric vehicle maker fights to hold its ground against fierce global competition. Musk is betting everything on a future driven by self-driving taxis and humanoid robots rather than just car sales.
Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Meanwhile, the drama in Washington is heating up as Senator Elizabeth Warren turns her sights on the National Labor Relations Board. Warren is demanding answers after the board dropped charges against Elon Musk and SpaceX regarding the firing of engineers who spoke out against the company culture. She is calling it a potential political favor for a high-profile Trump ally and wants to know exactly why the case was abandoned. In the world of digital assets, Tesla is holding firm despite taking a significant hit on paper. The Elon Musk-led giant reported a $222 million loss on its massive Bitcoin stockpile this quarter. While the value of those holdings has dipped, the company refuses to sell, keeping its multi-billion-dollar bet on cryptocurrency intact while the market watches closely. Finally, Tesla is doubling down on its shift from an automaker to an AI powerhouse. With capital expenditures skyrocketing to fuel chip factories and robotics production, Musk insists the best is yet to come for his next-generation tech. If you want to stay ahead of these market-shifting stories and get the latest updates on every major industry move, smash that like button and subscribe to the channel so you never miss a beat. Is Tesla still an electric car company, or are we witnessing the birth of something entirely different? Elon Musk just dropped the latest earnings report, and honestly, it's a masterclass in mixed signals. On the surface, the numbers look solid. Profits are up 17% to $477 million, and they managed to beat Wall Street's earnings expectations, hitting 41 cents per share. But if you dig just a little deeper, the cracks start to show. Revenue actually missed the mark, and let's be real, Tesla isn't the undisputed king of the road anymore. They've lost their top spot to China's BYD, and competition in Europe and Asia is breathing down their neck. But here is the kicker. Musk doesn't seem to care about car sales anymore. He is pivoting hard. While investors want to hear about margins on Model 3s and Ys, Musk is busy talking about Robotaxi, AI, and a humanoid robot named Optimus that he claims will be the biggest product in human history. He is doubling down, planning to spend over $25 billion this year on a massive new chip factory and the infrastructure to support a fleet of steering wheel-free Cybercabs. It is a bold, high-stakes gamble that has the market feeling like it is on a roller coaster, with stock prices swinging wildly after the announcement. Is this the brilliant future of autonomy, or is Musk distracting us from a core business that's losing its edge? I want to know what you think. Are you betting on the robot revolution, or are you worried about Tesla's slowing growth? Drop a comment below and hit that subscribe button to stay on top of the tech race. At the end of the day, Tesla is either about to reinvent the world or they are sprinting toward a very expensive identity crisis. Is the American Labor Board prioritizing political loyalty over the law? That is the billion-dollar question Senator Elizabeth Warren is asking today as she turns the heat up on SpaceX. Back in 2022, SpaceX made headlines for allegedly firing engineers who dared to speak out against Elon Musk, citing a culture of harassment and sexism. It was a clear-cut labor dispute, or so it seemed, until recently. Now, under the new administration, the National Labor Relations Board, the agency responsible for protecting those very workers, has abruptly dropped the charges. Senator Warren isn't buying the official explanation. She's calling out what she views as a blatant instance of political favoritism, especially given Musk's massive financial backing of Donald Trump's recent campaign. Warren, alongside Senator Richard Blumenthal, has launched a formal investigation. They are demanding to see the receipts, literally. They want to know exactly why the board suddenly decided that SpaceX, a rocket company, should be classified as an air mail carrier under the Railway Labor Act, a move that essentially kills the workers' legal leverage. It sounds like a technicality, but as Warren puts it, calling a space exploration firm an air mail carrier is frankly absurd. Critics argue this isn't just a jurisdictional shift, it's a strategic maneuver to protect a federal contractor who has become a key player in the current administration's orbit. This all comes at a critical time for SpaceX, as the company eyes a historic 2026 IPO with a staggering valuation nearing $2 trillion. So, what do you think? Is this a genuine bureaucratic reshuffle, or a case of the system being bent to accommodate a billionaire ally? Drop a comment below and let me know your take on this power struggle. Don't forget to hit that subscribe button for more deep dives into the stories shaping our economy and our laws. After all, when the rules change for the biggest players, we all need to be paying close attention. Have you ever wondered if Elon Musk is a diamond-handed believer or just waiting for the right moment to exit the crypto scene? Tesla just dropped its Q1 earnings, and the headlines are a bit of a roller coaster. Despite reporting a staggering $222 million in paper losses on their digital assets, the company didn't sell a single coin. That's right. Tesla's stash of 11,509 Bitcoin remains completely untouched since last quarter. Now, it's worth noting that Tesla doesn't officially break down their holdings in their reports, but the data detectives over at Arkham Intelligence have confirmed it's all Bitcoin. Given that the value of Tesla's digital assets dropped by about 22%, mirrored almost perfectly by Bitcoin's own market dip, it's clear they are riding the volatility wave without flinching. This feels like a massive test of conviction. Remember, this journey started back in early 2021 with a massive $1.5 billion purchase, and while Tesla briefly flirted with accepting Bitcoin for cars, they hit the brakes over environmental concerns. Since then, it's been a game of wait and see. Looking at the broader picture, Tesla's Q1 revenue hit $22.71 billion, missing analyst estimates, though they actually beat expectations on earnings per share. It's a classic Tesla move. The core business is chugging along with a solid 51% jump in full self-driving subscriptions, while their speculative side bet remains a polarizing topic for investors. So, are they holding because they see a future for BTC? Or is it just too much of a distraction to deal with right now? I'd love to hear your take. Are you holding on to your crypto through the dip, or is it time to take chips off the table? Drop a comment below and let's get the conversation started. If you enjoyed this breakdown, hit that like button and subscribe for more deep dives into the stocks that are shaping our economy. Is Tesla still a car company, or is it something else entirely? Elon Musk just dropped the Q1 financial report, and it's a masterclass in navigating the future versus present tug-of-war. Let's start with the hard numbers. Tesla posted a $477 million net profit, beating Wall Street expectations and sending the stock price climbing by over 4% after the bell. While revenue grew 16% to over $22 billion, the real headline isn't just about selling cars anymore. It's about how those cars are funding an ambitious, multi-billion-dollar pivot toward AI, robotics, and autonomous driving. Think about this. Tesla's capital expenditures skyrocketed 67% to nearly $2.5 billion this quarter. They aren't just building EVs, they're building the infrastructure for a sci-fi future. You've got the Cortex-2 training cluster, the massive shift to AI-driven FSD, which saw a 51% surge in subscriptions, and the radical transformation of the Fremont factory floor to make room for mass-producing Optimus humanoid robots. But it's not all smooth sailing. The inventory levels are rising, and vehicle deliveries actually came in slightly under analyst expectations. Some critics are calling it a disappointing start, and with a valuation sitting at a staggering 183 times forward earnings, the market is essentially pricing Tesla as a pure tech giant, not a traditional manufacturer. Musk, true to form, is leaning into the long game. He's promising an exponential S-curve for products like the Cybercab and Optimus, suggesting that while the initial climb is slow, the payoff will be seismic. Even the energy business, which saw a temporary dip, is already gearing up with new megafactories in Houston and Shanghai. So what's the takeaway? Tesla is betting the farm on AI and automation. They are trading current, stable profit margins to chase the biggest prize in history, the robot humanoid revolution. The question for you is, do you believe in the vision, or are these massive bets just too risky for the long term? Let me know your take in the comments below. If you found this breakdown useful, hit that like button and subscribe for more deep dives into the companies changing our world. Stay curious, and I'll see you in the next one.